So, there's a huge crisis blowing up right now in one of the world's most critical waterways. We're talking about the Strait of Hormuz. In this explainer, we're going to break down the massive economic fallout and really get into how this one tiny choke point is sending shockwaves across the entire globe.
It all really boils down to this one giant question that everyone from world leaders to market traders is desperately trying to answer. What actually happens when a waterway this important is just suddenly closed for business?
All right, to really get a grip on the scale of this whole thing, we've got to start right at the epicenter of the crisis, a very narrow but incredibly strategic little strip of water over in the Middle East. Now, this is not just any old shipping lane. It's basically the planet's main artery for energy. We're talking about a fifth of all the oil the world uses, plus a huge chunk of its natural gas, all flowing through here every single day. And for countries like Kuwait and Qatar, there's pretty much no other way out. This passage is everything to them.
But for the last 6 weeks, a conflict has been escalating in the region, and it's led to a full-on naval blockade. That constant stream of massive tankers, it's been brought to a grinding, near-total halt. And that brings us to the first and most immediate domino to fall, because when the ships stop moving, it sends an instant shockwave straight through the world's energy markets. The reaction was just immediate and severe, so much so that the International Energy Agency is calling this the worst energy crisis the world has ever seen. The hit to the global supply chain is, well, it's completely unprecedented. Just look at this number. At its worst, the world lost over 12 million barrels of oil in a single day. To give you some perspective, that's more than 11% of the entire planet's daily demand for oil, just gone, vanished from the market. And this timeline, it just says it all, doesn't it? You can see prices were sitting pretty stable around $70 a barrel. Then, bam, the conflict hits its peak and prices shoot up to almost $120. Even now, they're still hovering way up there, which tells you just how nervous the market is. Now, here's where it gets really wild. If you put this crisis into historical context, the amount of oil we're losing each day is more than the loss from the 1973 Arab oil embargo and the 1979 Iranian Revolution. Combined, we're in totally uncharted territory here. But, a crisis like this never just stops with oil prices. That first ripple has now turned into a massive widening shockwave that's hammering the entire global economy. So who's in the direct line of fire? Well, as this chart makes crystal clear, a staggering 80% of the energy coming through the strait is headed straight for Asia. This makes the region's powerhouse economies uniquely, and you could say dangerously, exposed to this shutdown. And people are starting to run the numbers on what that damage could look like. In a worst-case scenario where this conflict drags on for a whole year, developing Asia could see its GDP growth slashed by 1.3 percentage points, while inflation spikes by over 3%. That's a brutal combo of economic slowdown and rising prices. The financial markets, of course, felt the chill almost instantly. Asian stocks tumbled more than 4% in just the first 3 weeks. It's that classic flight to safety you always see. Investors hate uncertainty, so they pull their money out and run for the perceived safety of US dollar assets.
Okay, so we've talked about markets and GDP, but what does all this high-level economic pressure actually look like on the ground? Well, it starts to filter down, and it hits specific industries hard. And we are already seeing it happen. Take the German chemical giant BASF. They've had to jack up their prices twice since the conflict began. It's a textbook example of how those higher energy and material costs get passed right on down the chain to you and me. And the pain is really spreading out. The chemical industry is getting hammered by soaring costs. Farmers are getting hit with insane fertilizer prices. Retail sales are falling because nervous shoppers are holding onto their cash. And of course, the shipping and airline industries are facing a double whammy: blocked routes and sky-high fuel costs. So with all of this disruption and uncertainty, it all leads to the big million-dollar question: where on earth do we go from here? A lot of experts think this crisis is a massive wake-up call for the world. It's forcing a huge strategic rethink about energy security. What that probably means is a big push for more investment in finding and producing energy and trying to diversify supplies, especially in places like North America. So what does the future hold? Well, analysts have kind of gamed this out. And the relationship here is crystal clear. The longer this conflict drags on, From a short-lived scenario to a severe one-year crisis, the deeper the economic pain gets, for both global growth and for inflation.
You know, at the end of the day, this whole situation is just a brutal reminder of how tightly woven together our world really is. A conflict in one tiny waterway can cause economic chaos for billions. And it leaves us with one last question to chew on.